Hope everyone's doing well. This is going to be a video over February 25th. So on the daily chart, we've been selling off in a fairly tight channel, and the odds were we were going to fall below the January low, and that's because of the monthly chart. The monthly chart had consecutive buy climaxes, buy climax here, 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 more here, here, and you went outside up. So you went outside down, outside up, paused, and then we went outside up, followed by outside down. So it's consecutive outside bars, and that's kind of like an expanding triangle, and it's a type of a breakout mode pattern. So the odds slightly favored that we were going to fall below January before we went above January's high. And daily chart, we did that over Thursday and Friday. And, here was Monday or Tuesday's open, and the channel down was tight. And it never looks like we're going to get there. We're going to fall. It never looks like we're going to fall below the lows. However, when it happens, it can happen fairly quickly. And, just like here, tight channel. First look's probably going to fail. Bear breakout, we're at the low, and we're going to probably fall below January. Then we get a big, we gap down on the open, big rally followed by big bull bar, and a lot of buyers down here. So 5-minute chart, prior day, rallied sideways, rallied into the close. And, bar one, you got a couple things going on. First off, in general, on the first bar, 20% chance it's the low of the day, which means 80% chance any breakout above bar one is going to fail. You can argue there's a channel here. Here's basically a bull channel. So we're breaking above it. It's probably going to fail. But it's probably going to go sideways and lead to a trading range. Trends usually turn into trading ranges before they reverse. So bull trend, trading range, and it was a triangle. We broke above, pulled back, and rallied. So here we have a second entry short. Do you sell here? I would not. Channel's fairly tight, and trade management's difficult. You can sell, put your stop above the bar, but again, it's a lower probability trade. So 8:55, we have adjust that. There we go. It's really kind of oh well. 8:55, we have a second entry short and decent entry bar. Some traders will sell below it, stop up here, and we broke below the lows. However, odds are we're going to go sideways to the moving average. 75% chance when you get consecutive buy climaxes into the prior close, you go sideways for a few hours, and then you decide on trend resumption up, trend reversal down. Pause, it's second entry buy. You can call it a wedge, 1, 2, reversal up, 3. Or you can just call it, two-legged pullback. Either way, when you get a bar one like this, traders will buy above it and they'll buy below. A lot of bulls will just buy the low of the bar, use a wide stop, betting that we'll go sideways more than we'll go down. Big bull bar, but weak signal bar for the bulls. And it's fairly, top of trading range, so not all that great of a buy. Still probably better to wait for some sort of consecutive strong bull bars, and the odds are we're going to go sideways. So just like we had a big bull bar here, the risk is big. Therefore, a lot of traders may look to buy a pullback. So, even like here, big bull bar, but the risk is big. So some people, they'll look at that and say, gee, I don't want to put a stop. I don't know if there's a 6% chance we're going to go here before we go down to the low of the bar. Therefore, I want to buy a pullback. And if I can buy a pullback, maybe I buy above this bar, stop down here. Maybe I buy a limit order, 50% pullback or lower, or wait and buy here, stop below here. Now I've got twice my risk, and it's a reasonable trade. Same thing over here, big bull bar, bad follow through, except we don't ever really pull back. 3 consecutive bull bars. It's always in long, and traders will start buying, but a lot of traders will start buying small. So if they have a full position, maybe they start buying a fourth of their position, stop down here or down here, just in case we keep trending up. And we pulled back a little bit, strong breakout, follow through. It is by the close. However, it's possible wedge. And bull bar here, pause here. So it's 3 consecutive bull bars. It's consecutive, again, we haven't touched the moving average since 1 o'clock on the prior day. So it's hard to buy up here. You could easily get a big bear bar closing when it's low and a sell-off. So it is by the close, but I think management becomes rather difficult. So pause, outside up. It's consecutive outside bars, outside down, then outside up. Maybe we'll go a little bit higher, but again, context isn't great. More up, and clearly we're in a small pullback bull trend. Traders are buying every pullback, but it's very difficult to buy. And a lot of traders, it's not as high probability as one thinks. And what I mean by that is the odds are it's going to go sideways, and you can buy closes and buy below bars, and if you're good at trade management, it works, but it's more difficult than it looks. If you're buying, you buy this close, where's your stop? Do you put it down here? Well, I don't know. If you buy this close, put a stop down here, what's the probability you're going to get to here? I don't think it's 60%. Maybe it's 55%, but you really need it to be at least 60%. So then you have to ask, do you scale in? Do you put a stop down here and scale in? Do you put a stop down here and scale in? So it's much more difficult than it looks. But either way, it is by the close, and traders will buy below bars, and especially buy at the moving average. Second entry buy, but you still have make the bars bigger. You still have the same problem there as all the others. You're buying at the top of a flag, so pullback, but you can call it a bull flag, went higher, bull flag, went higher, bull flag, higher, bull flag. Eventually, you're going to have a failed breakout of the bull flag, which is a final flag. So we're going to, kind of like here, broke above, sold off. 3 consecutive bull bars. Best looking bull bars, it's consecutive buy climaxes. You can call it a wedge top. Probably still a minor reversal on the way down, but a lot of traders, if they were still long, probably get out below the bar. And certainly, again, below here. If you notice, we went above this high, sold off. Now we're going above this high, probably going to sell off. So finally at the moving average, 99% chance you're going to get there on every day. Traders will buy and scale in. Other traders may buy here, stop down here, or use a wide stop. They will buy here, stop down here. And if you look at this rally, it's weak. Bull bar, pause, 2 bull bars, pause, another bull bar at the high of the day. And it's probably going to lead to a failure. This looks like a leg in a trading range. All of this looks like a leg in a trading range. So from here, you can really argue it's all bad follow through. So when you start to overlap a lot like you are here, you have to become leery that we could easily sell off back down to here. So, what's the probability? It's a higher high major trend reversal. You can call it an expanding triangle. You can call it it doesn't matter really what you call it. It's a trend line break, new high, followed by a more complex trend line break to a new high. This channel is tight, but what's the probability if you sell below here, stop up here, you get down to here? It's probably 40%, and at a minimum. Therefore, the probability of one buying this low, stop down here, and putting a target up here is not 60%. So a lot of traders will just get out below that bar. Yes, you can be long, stop below here and just trail, but I wouldn't do that. And fairly deep pullback, probably entering a trading range. Bulls buying below bars, bad low one, went outside up, they're buying. But what do you notice? Make the bars bigger so it's easier to see. So we're going sideways, and just ignore the price scale for a minute. In fact, let me do it like this. I'll just leave it be. Big bull bar, but where do you put your stop? The first question you should ask yourself is stop placement. If you buy this close, do you put a stop down here? Do you put it down here? Do you put it down here? And everywhere you move your stop changes the probability. Just like everywhere you put a target changes the probability. You could buy this close and put a target one tick above the bar. You'll probably have a 97% chance of being profitable. However, it's a losing strategy because eventually you're going to buy the low tick and take a devastating loss. So you can buy here, put your stop down here, but the risk reward's bad. Therefore, traders will wait to buy a pullback. Bears will sell. They'll sell here, stop up here. And just like that, went outside down. So another little tidbit is when you have a small signal bar, very often you'll trigger the signal bar, go above it, and turn down. And what that does is it traps traders. So trying to find another example. Maybe like here. It's not a great one, but it's the same concept. Even though this one probably went below the bar, then went outside up, but either way, I think you get the point. So starting to go sideways. Here's second entry buy at the bottom of a trading range. Now we have kind of like a bull bar closing on its high, and we had a stop entry here, went outside up. Reasonable buy above, but again, trading range. It's close to the middle of the range, probably going to go sideways. So overall, easiest, what I'd recommend is make sure you're viewing things is the market cycle. So ask yourself, trend trading range, if it's a trend. Next, ask yourself, let me back up. Make things binary decisions. So first ask yourself, trend or trading range. Then develop setups for a trend and develop setups for trading ranges. Develop setups for a channel. And how you want to kind of think through everything is, pick a random day. Let's go to here. And, okay. So, I'm going to go to the start of the next day, which is here. So at this moment, are we in a bull trend, bear trend, or trading range? Well, we're probably in a trading range. Big bull bar. And if we're in a trading range, you want to eliminate decisions, make it more systematic. So if I have a trading range, what are setups I can take? And, are we at the top of the range? Yes. Okay. Most breakouts fail, so this breakout will probably fail. However, if I'm at the top of the range and I know that if I have a strong rally to the top of the range, I don't want to sell the first reversal. I want to wait for second entry short. So wait for a failure attempt, a retest, and then another failure attempt. So here, no failure attempt, big bear bar. Okay, missed the trade. Now what about here? What's my rules in a trading range? Well, I don't want to sell in the middle. So maybe, this kind of gets into flow charts. And, maybe you can say, okay, in a trading range, I don't want to do anything in the middle. I want to buy at the bottom and sell at the top. Well, are we in the middle? Yes. Therefore, I don't want to do anything. Are we in the middle? Yes. I don't want to do anything. Still in the middle, still in the middle, still in the middle. Okay, big bull bar. We're getting close to the top, but most breakouts fail. Follow through bar. Okay. This might succeed. Higher lows. But I don't want to buy at the top of a trading range. I don't want to buy bull breakouts at the top. I want to wait for a breakout and reassess. So starting to look like we're going to get a breakout here. Well, maybe I have a flow chart or a decision tree for breakouts. Well, in a breakout, what I might ask myself is I say, okay, I think we're getting a breakout. First question, are we getting a breakout in a trend or a trading range? Well, we're getting a breakout in a trading range. Okay, has it clearly broken above the trading range? No. So I should probably wait for a pullback or a stronger breakout. So here's a failure attempt, second failure attempt. So, maybe if I still think it's a trading range, maybe I sell below this bar, stop up here. It's lower probability trade, but risk reward's decent. I sell here, stop up here, target down here. And 3 consecutive bear bars. In a trading range, I know there's a lot of pullbacks. Boom. So tighten my stop. Maybe I take, I still think trading range. And where I'm getting at with this is you want to develop, make yourself a decision tree. Look up a flow chart, binary decisions. Al talks about that, and there's several people that talk about it in Al's information. Make a decision tree for how do you trade a trend, the market cycle, trend, trading ranges, and channels. Then, in a trading range, make a decision tree on your setups. Second entry short at the top of a trading range. What are you going to do? Well, okay, develop a process to what are you going to look for to take those trades. Next, develop a management process for that type of trade. So it's second entry short, top of the trading range. What are some obvious things I want to do? Well, the first is scalp. I know that the odds are it's probably going to stall in the middle. So I need to ingrain in myself, maybe make a decision tree. When I'm short and I get disappointing follow through, maybe I look to scalp out. So sold off, a little bit of disappointment, second leg down. A lot of times trading ranges fail after second legs. I want to take a little bit of profit. Now we have a bull bar, and maybe I get out of the rest above this bar. Maybe I tighten, maybe I sell most of my position buy back most of my position, and then you get out above this bar. Didn't really triggered. Now we have a second entry short, but again, kind of in the middle of a tight trading range. Probably not going to be that great. Most traders should get out. So now I'm back to starting over. We're in a trading range. Are we in the middle? Yes. I don't want to do anything. Still in the middle. Okay, 3 consecutive bear bars. Maybe we're trying to break below 4 consecutive bear bars. So just like up here, most breakouts fail. I think we're getting a bear breakout. However, I go to my breakout decision tree or flow chart, and I say, okay, what are we breaking out of? Well, we're in a trading range. Okay, is the breakout strong? Well, it's in a trading range, so not quite. Do I think there's a 60% chance of a measure move down? Not yet. Therefore, I'm going to wait to sell a pullback or wait for the breakout to fail. Big bull bar, but 4 consecutive bear bars. I don't want to be the first person to buy. I'll wait. Micro double bottom. Maybe I can buy here, stop down here. It's low probability, but it's a reasonable trade. I don't like the overlap. And if you did, maybe you get out there, maybe you hold for a little bit more up, but then what do you notice? Well, you bought here, you're back in the middle of the range, 3 pushes up, so it's a wedge. Most traders probably exit most of their position here, selling off again, finding buyers, still limit order, and again, we're just oscillating around the middle. So one of the most important things one can realize in a trading range is don't do anything in the middle. So, and you want to make this reflexive. There's a lot of decisions you have to make when you're looking at a chart. Therefore, if you can build a decision tree, such as, I'll give you just a basic example. So, wish I could make this bigger, but I can't. So I'll just kind of try and do it like this. So here's a market cycle flow chart. First thing, is it a trend or a trading range? And let's say, for hypothetical reasons, we're in a trading range. Okay, 2 little reminders. 80% of breakouts fail. Most setups will be close to 50-50. And the next question I'm going to ask is this a tight or broad trading range? Well, I think it's broad. Okay. Are we in the middle of a trading range? Yes. And if I think we're in the middle of a trading range, let me scoot this over. Wait for price to reach an extreme. Okay, so I'd go to here. Have we reached an extreme? No. And it's kind of like a never-ending cycle, because if you're in the middle, you don't want to do anything in the middle. Now let's pretend prices, and I just kind of wrote this down, so I'm not even really finished with it, but it's just kind of a fun task. Has it reached an extreme? Let's say it has. Okay, is it in the upper third? Let's just say it's in the top third. Okay, move up to the top third. Is it strong? Yes. Okay, wait for a second entry sell, micro double top, wedge top, or strong breakout to the downside. So what you want to do is you want to make it systematic, where you kind of eliminate some decisions. So let's go to a random day over here, and I'm just going to scroll. Okay, so we had Fed report, it looks like. It's 1 o'clock, consecutive buy climaxes. Are we in a trend or a trading range? Well, we're probably in a bull trend, okay? So I know we're in a trend. We're in a channel, therefore channel's tight, so probably look to buy pullbacks. Reasonable thing to do. But it's consecutive buy climaxes, so again, kind of like that Friday that we just looked at on the 25th, I probably want to buy a pullback, but I don't want to sell. And strong breakout, but I'm willing to miss it. That's fine. And, unfortunately on a day like today, you might miss a lot. So big bear bar, we're getting closer to the range, but I think we're going to get down there, so I'd rather just wait to buy. And boom, we have a big bull bar. Now, ask yourself, are we in a trend or a trading range? Well, probably in the early stages of it. We still might be in a trend, but still probably in the early stages of a trading range. Do I want to buy here? Well, you can for a scalp, but 3 consecutive bear bars, probably going to get a second leg down. Maybe I'll just wait for stop entry. Pausing, outside down, so a lot of bear bars, sign of strength. Could be an endless pullback, and then boom, okay. So what happened here? Well, that's the problem with buying 3 consecutive bear bars, the moving average, is bulls want to buy the moving average. However, they realize this is all climactic, and they think there's going to be a second leg, and they don't want to buy if it seems too strong. If the odds favor a second leg down, I don't want to buy and hold. I want to wait for the second leg, then buy, just like up here. I think the market's going to sell off to the moving average, but I don't want to sell here because we might keep going up. Therefore, I want to see a sign of strength by the bears. So sideways, bull breakout sideways. And even then, micro, starting to kind of form a wedge, big bear bar, consecutive bars down. So now a really big bear bar. So again, ask yourself, okay, is it a trend or a trading range? Well, probably a trading range. Might be the early stages of bear trend. I don't really know. We're back to the open of the day. That's a lot of selling pressure. First lot's probably going to fail. So if I had to pick one, maybe this is a bear trend with the early stages. And starting to pull back, starting to get a lot of bull bars. But just as I said, this could be at the bottom of a trading range. Outside down, outside up. So what about here? Bear spot, disappointed, second entry buy. Bulls may buy here, stop below, but again, we could still fail somewhere up here. Big bull bar, so if you were long, what are you expecting? Are you expecting a bull trend resumption or a trading range? You're probably expecting a trading range. So a lot of traders may, they may flip to a trading range. How would they trade a trading range and say, okay, second entry buy, I want to look to take part off in the middle, and we paused. Now there's other traders who bought up here, they're going to buy more lower and look to get out around 50%, starting to go, sideways to up, and boom, big bear bar. So just as traders, they bought here, disappointed by its bull bars, but it's not strong, and then they start giving up. And now we're back to basically the open or the high or the entry price of this. We close this gap over here. So we're kind of getting in the middle of a trading range. So you want to do things at the extreme of a trading range. You don't want to do things in the middle. For this reason. Boom, big bear bar. Okay, so just as I have on this chart, middle of a trading range. Wait for an extreme. So we're kind of getting close to the bottom. Therefore, I want to look for what? I want to look for a second entry buy, some sort of wedge bottom, strong bull breakout. What about here? Is this a wedge? 1, 2, 3. Is this a reasonable stop entry buy? Sure, but again, here's the day's range. Here's the top, real close to the middle. So even though this looks like a really good bull bar, and it may go higher, it may not. And now you have a second entry short. If you did buy, get out of shorts. And there you go. So we just kind of went sideways into the close. So I hope this helps. And I'll try and discuss more about flowcharts and trying to make things binary decisions The key piece I'll leave is you want to make things very ones and zeros. So make it, write a flow chart, give yourself two choices, and reduce the amount of decisions you have to make.